Retirement accounts can be very, very confusing. We're going to break down individual retirement accounts, IRAs, into their basic components. So let's go. First things first, you have two main options when you're looking at IRAs. You have a traditional IRA or a Roth IRA. So let's talk tax deductions. Traditional IRA is going to get a tax deduction for the contribution you make to that retirement account. Basically, that means you have $100,000 of W-2 wages. If you make a $6,000 contribution to your traditional IRA, that is going to lower your taxable income, your W-2 wages that you're reporting on your 1040 by $6,000. So you only have taxable income of $94,000. Now let's look at a Roth IRA, because that's going to be completely different. So same scenario, you have $100,000 of W-2 wages. You make a $6,000 contribution to your Roth IRA. That is not going to get a tax deduction. So your wages in that instance are still going to be $100,000 when you go to file your 1040 or your tax return. All right, let's talk withdrawals. So in this instance, we're assuming you're over 59 and a half. With IRAs, if you're over 59 and a half, there's no penalty, which we'll cover later, to withdraw funds from your IRA. So if you have a traditional IRA and you withdraw $10,000 and you're over the age of 59 and a half, that $10,000 is going to be taxable to you. So it's going to be tax income on your 1040. Now on the flip side, your Roth IRA, if you do the same thing, you're over the age of 59 and a half and you withdraw $10,000 from your Roth IRA, it is completely tax-free. There is the big difference between a traditional and a Roth IRA. All right, let's talk contribution limits. So both IRAs are going to have the exact same contribution limit. Now, depending on when you're watching this video, 2022, you have a $6,000 contribution limit. Now, if you're over the age of 50, you get a bonus or extra $1,000 that you can contribute. So you can contribute up to $6,000. So for 2023, the limits have increased to $6,500. And if you're over 50, you still get the extra $1,000. So if you're over 50, you can contribute up to $7,500 to either a Roth or a traditional IRA. All right, let's talk penalties. In the instance that you do need to withdraw from either IRA before the age of 59 and a half, there is a pretty big difference between the two. So a traditional IRA, you've put in pre-tax dollars. So any withdrawals that you take before the age of 59 and a half is going to be subject to a 10% penalty along with paying the taxes on that withdrawal, meaning it is taxable income to you when you withdraw it, and you're going to get hit with a 10% penalty. Not a good scenario. In a Roth IRA, now any contributions that you've made, you can withdraw those tax-free regardless of your age. Now, if you withdraw earnings, let's say you've had appreciation of stocks or you have dividends, you have interest, if you withdraw any of that money before the age of 59 and a half, that is also going to incur a 10% penalty along with paying the tax on those earnings. All right, which one is better? It depends. So you got to look at where you are in life, which tax brackets you're currently in, and then make your best judgment on what makes the most sense. So if you're younger in a lower tax bracket, a Roth IRA probably makes more sense. If you're getting closer to retirement and in a higher tax bracket, more than likely a traditional IRA is going to make more sense. Meaning if you're younger, you have more time to let that Roth IRA really generate compound interest, dividends, stock appreciation. So you're going to get the greater benefit later down the road when you're 59 and a half to withdraw all that tax free. If you're closer to retirement, you're more than likely in a higher tax bracket, and you're probably going to benefit more from the tax deduction than the appreciation, the dividends, interest compounding, because you just don't have as much time. The last thing I want to mention is there are income limitations. So if you are a high earner, and I'm not going to define what that is, but if you make a certain amount of money, you cannot contribute money to an IRA. You can Google those, or there's many websites that have that.